Thank you very much. Good morning to everyone, my dear friends. Uh, this con call, as you know, is for bringing to a notice the financial results of New India Assurance for Q3 and also for the first 9 months of the current financial year. I'm glad to inform you that New India has posted very strong results for the period. Our premium for Q3 was about 6,385 crores with a growth of about 23%. We have grown very strongly. Our profit after tax was 617 crores. For the same period last year, we had posted a small loss of 24 crores. The combined ratio for the quarter has come down to 109.1 as against 123.9% for the same period last year. The adjusted combined ratio has come down to 92.9% as against 108.2% for the same period last year. The increase in profitability and the drop in the combined ratio and adjusted combined ratio is largely because of reduction in the incurred claims ratio as well as management expense ratio. The incurred claims ratio came down to 82.82% as against 95.61% of the same period last year. And the expense ratio for the quarter was 17.5 as against 21.2% of the same period last year. Just going to the results for the first 9 months of the current year, the company has completed a premium of 19,208 crores with a growth of 17%, made a profit after tax of 1,865 crores as against 455 crores of the same period last year, a growth of about 310% in the profit after tax. The combined ratio came down to 110.8 as against 121.2% of the same period last year. The adjusted combined ratio was 93.2 as against 104.1% of the same period last year. Again, the increase in profitability as well as the reduction in the ratios, both the ratios, has been because of drop in the incurred claims ratio as well as management expense ratio. The incurred claims ratio came down to 85.89% as against 93.27% for the 9 months. The expense ratio came down to 16.89% as against 20.89% of the same period last year. So this has contributed to the improvement in the combined ratio as well as adjusted combined ratio and resulted in the almost threefold increase in the profits. The return on equity for the first 9 months stands at 18.3%. The solvency of the company as on 31st December is 2.39. It's a very strong number. The net worth of the company as on 31st December, including fair value, is 40,983 crores as against 35,642 crores the end of last year, same period. The assets under management, the investments, is about 65,772 crores as against 59,449 crores for the same period last year. So in all, you would see that there is a very strong improvement in the performance of the company and very strong results. The insurance sector, as I have been saying in the past, is poised for a great growth. There are a lot of opportunities. Even the recent budget has many positives for the insurance sector. They have come out with a very large national health protection scheme covering about 50 crore people. We feel it's going to be a game changer for the insurance industry in terms of increasing the insurance penetration. Similarly, Section 80D benefits has been enhanced for senior citizens from 30,000 to 50,000. The schemes like Jandan and then the products like Suraksha Bima Yojana, which the government had brought in, they have announced their intention to expand them, especially the Jandan accounts, which are running into crores, will be used for micro insurance. So that's a great move for the insurance sector. And in general, strengthening the rural economy and also push to the infrastructure sector like aviation, transport and coastal transport would provide a lot of opportunities for the insurance sector. So I look forward to the future with a lot of optimism. I think with these initial comments, now I would like to open the forum for discussions. Thank you very much.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question may please press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, in order to ask a question, you may please press star and 1. We'll take the first question from the line of Vikas Agarwal from AAA Investments. Please go ahead.
Yeah, good morning. Thanks for the opportunity. My first question was actually referring to slide 4 of your investor presentation, where we say that we aim to obtain better commercial arrangements from reinsurers. So why do you think we'll be able to negotiate better rates?
See, basically, New India is a very strong company and with a large legacy, long legacy. And, we are the largest reinsurer in terms of volume for the reinsurers. And one more advantage New India possesses is its international A rating. So these are some of the advantages, and people know the underwriting domain expertise of New India Assurance, and also they know the business opportunities. So we feel that this will give us an edge in terms of negotiating better rates with the reinsurers.
Okay, because I think GIC Ray possesses the right of first refusal, so that is why this question.
Actually, that regulation is still in the making, sir. It is not right of first refusal, it is right of offer. So what the regulator intends to is the reinsurers, the Indian market should be offered participation. So that is how it has to be seen. But for us, as a very large player and with these strengths, whatever be the situation, we will be in a position to negotiate good terms with the reinsurers.
Okay, so which other reinsurers are we dealing with currently?
Sir, we deal with many of the major reinsurers of the world, like Munich Re, Swiss Re, Hanover, SCOR, many of the Lloyd syndicates, Zurich. So some of the major names in the India international reinsurance market are our customers. Berkshire Hathaway. These are all our reinsurers.
Okay. And one technical question actually. So I think the reinsurance companies also have a policy where they set aside some gains for the policy holders. So do these gains actually accrue to us, or how does it work?
Can you repeat the question?
Yeah, I think even the reinsurance companies make some provision for investment gains that accrue to policy holders.
See, actually the policy holders funds which are there in the reinsurance balance sheet are similar to what we have. The funds belong to us, but the income belongs to the reinsurers. It doesn't accrue to us.
Okay, understood. And on the crop insurance side, what do you think is the growth outlook for the sector? I think we've seen very, very strong growth for the sector over the last couple of years. So what is the outlook going forward?
So the crop insurance scheme was a new scheme launched in a very big way last year. The Pradhan Mantri Fasal Bima Yojana was in the year 16-17. So that year the sector had almost, the portfolio had almost a 300% growth. But this year, it's already kind of stabilized, but we are trying to bring in more farmers into the net, and the government has announced its intention to provide more budget outlay for bearing the premium. So this year the growth 17-18 is around 20%. So this is the kind of growth we will see going forward.
Okay, and on this also, I think we've mentioned that we have taken significant reinsurance for the crop side. So is this proportionate reinsurance, or what is the kind of treaty we have?
Sir, we have a proportionate reinsurance wherein 80% of the business is reinsured with the reinsurers. Even for the balance 20%, we have what is known as an excess of loss reinsurance to protect the balance 20%. So that way we have covered ourselves adequately to remove the volatility of the results of this business from our financials.
Okay, and one final question actually on the National Health Insurance Scheme that was unveiled in the budget. So do we think that the premiums are going to be sufficient? The figures seem very low.
The government has clarified, quite a few times that, this is only an initial outlay. The premiums, in fact, they have to finalize the product and also the packages of the hospitals across the country. So the premium will be decided based on these important parameters. And the government has said that whatever be the premium, and they are committed to funding it.
All right. Okay. Thank you. That's it from my side.
Thank you.
Thank you. We leave the next question from the line of Charulata Gedani from Dalal and Broacha. Please go ahead.
Yeah. Hi. My question pertains to the claims incurred. The claims incurred have gone down. I think it is because Q3FY17 was an effect of demonetization.
No, I mean, in our sector, I wouldn't say that the demonetization had any major permanent impact. The drop in the claims ratio is the result of sustained efforts the company had put in the last 1 to 1.5 years. We have seen drop in the health claims ratio. We have seen drop in the motor own damage loss ratio. We have also seen drop in the fire loss ratio, the three key sectors. So we have taken some steps like repricing our health products, both retail as well as group, and also claims management steps in health. Similarly, in motor own damage, we did a better risk selection, avoiding risks which were giving us more losses. Also using professionals like automobile engineers to have a better control over the claims. In case of fire as well, we had recruited a lot of risk engineers who helped us in looking at the quality of risk. We also prepared a set of declined risks which were giving us large losses over the years to kind of avoid those risks. So a lot of steps were taken which are now giving us results. That is why we are seeing a drop in the incurred claims ratio.
Okay. So you think this level of claims ratio should be sustainable going forward?
Certainly, ma'am, and our intention is to improve it further.
Okay. Okay. My second question pertains to the difference between net premium written and gross premium written. I believe there is some payment that needs to be made in between. So the
difference between the gross premium and net premium is what is called as reinsurance. As direct insurers, we take a lot of risks, and then we identify in every portfolio certain portion of the risk which need to be transferred to the reinsurers. This is the principle of insurance, just spreading the risks ourselves. For example, if there is a major natural calamity, we wouldn't like the entire losses to be falling into our balance sheet. So we will have a good reinsurance program so that, a large part of the losses are transferred to the reinsurers. So we have a very sound, conservative reinsurance program which has been standing as in good stead over the years. So that is what is the difference between the gross premium and net premium return.
So in this quarter, your reinsurance has gone up.
In this quarter, the reinsurance has gone up because we had crop insurance, where, as I told you, the extent of reinsurance is relatively high. So you will see these quarterly variations in reinsurance depending upon the profile of business which is booked.
Okay. And typically, what type of business do you reinsure more?
Ma'am, actually there is reinsurance in every class of business. There is what is called as obligatory reinsurance, 5% which the regulator would like us to place with the Indian reinsurer. The other reinsurance arrangements are based on the nature of the portfolio. For example, in portfolios like fire insurance, projects engineering insurance, aviation insurance, the extent of reinsurance is relatively higher. Whereas in areas like motor insurance, health insurance, where the losses are typically small, the extent of reinsurance is smaller. So depending upon the line of business, the potential for losses, we prepare a reinsurance program.
Okay. Okay. Fine. Thank you.
Thank you.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, please limit your questions to 2 per participant only. The next question is from the line of Nadesh Jain from Investec. Please go ahead.
Uh, Good morning, sir.
Good morning.
Sir, my question is on motor own damage. For almost all the players who have reported as of now, we have seen quite a strong improvement in motor own damage claims ratio. So is this anything which is going across the industry where we are seeing improvement in loss ratio? Is it because of pricing, or is there any underlying consumer behavior change which is happening?
There are a couple of reasons why this is happening. One, of course, is the general realization among the players that this portfolio's profitability needs to go up. The second thing is the regulator had come out with a guideline called Motor Insurance Service Providers from 1st November, bringing all the motor dealers under the regulatory ambit. Earlier, the dealers were selling policies, but they were not under anybody's regulation. So this has also resulted in a little bit of control over claims. We will see the impact of that more in the coming quarters. And also the payouts to them have also been reduced and standardized. The third thing which has happened, especially in our case, we have analyzed and we found that a product called nil depreciation policy was causing a spike in our loss ratio. This is for all the players in the industry. So different companies have been adopting different approaches. So what we have done is, earlier we were giving for vehicles even up to 7 years. We have reduced it to 3 years. So this has also contributed to drop in the own damage loss ratio, sir. These are some of the reasons why you would see a drop in the OD loss ratio.
So do you think the loss ratio that we are seeing in the own damage segment, are they sustainable, or?
Sir, it would improve, sir. It would improve.
It will improve. And how MISP guidelines benefit in the loss ratio? Because I was under the impression that it will benefit your OPEX ratio in the own damage segment, but loss ratio should remain same because of MISP.
Sir, if you really see the motor dealer business, even for a vehicle which is same, like a Maruti or Hyundai or any name you take, the loss ratios vary from dealer to dealer. So the dealers do have a role in the claims ratios going up. So this is what we have observed. So now what the guideline says is the dealers who typically also have garages making repairs should not influence claim settlement. This is a guideline which is put in by the regulator, and their books will be inspected, and they should not have a role in appointment of loss assessors. So these steps have an influence in bringing down the claims, because their books can be inspected by the regulator, and if they found to have influence in the claim settlement, they may even lose their ability to sell insurance policies.
Okay. So you are saying that the behavior from the dealer perspective has actually changed, where probably the leakages that were happening earlier are not happening.
Yes.
And this quarter we have seen just two months of MISP rollout. So yes, probably next quarter we will see further improvement in loss ratio. Is that reasonable?
Absolutely, sir. You are right.
Okay, sir. Okay. Thank you, sir. Thank you.
Thank you. The next question is from the line of Anubhav Adalka from Antique Stock. Please go ahead.
Hi, sir. Congratulations on a great set of numbers.
Thank you.
I actually wanted to just get your view on the statement which FM made that the rest of the three public sector companies would be merged into one entity and then listed. So do you think it could be a threat to the business going forward, or it could play the other way around? Just wanted to get your thoughts on that.
Sir, of course, the merger has just been announced. The full details are still not known. Mm-hmm. But what is obvious is, the three companies will come together. And, in terms of premium volume, they will be bigger. But in terms of financial strength, even if the three companies come together, New India will still be larger in terms of the financial strength. And, the mergers generally are a very long-term process and quite a challenging process. So we really have to see how it works, because the main idea of the merger seems to be to list these companies and also to raise capital, because these companies need capital to improve their solvency margins. I personally feel that there is no negative as far as New India is concerned. Maybe we may even get benefits. We are not sure, but we don't really see any issues, and there could be an unintended benefit for New India Assurance.
Great. Thank you.
Thank you. The next question is on the line of Bharat Seth from Quest Investments. Please go ahead.
Hi, congratulations, sir, on good set of numbers.
Sorry to interrupt, Mr. Seth. Sir, we're not able to hear you. Can you speak
Hello?
a bit louder?
Hello.
Yes, thank you.
Congratulations on good set of numbers, sir.
Thank you very much, sir.
Can you give, broader, we were expecting, a market to grow. This first half, 9 months, we have grown by 17% despite increase in insurance rate also. So, like to like, what kind of a growth that we have seen and going ahead, what kind of, growth we are looking for?
So the quarter 3, we have seen a growth of around 23%.
Correct.
And, we are looking at a growth of 18 to 20% as something which is normal for the next many years. As I said, the insurance sector is poised for a great growth. 20% growth is going to be achievable for New India Assurance for many years in the future.
And sir, second, a broader question. Generally, how much is reinsurance we take as a broader, depending on the change on a big of the business, but looking at a broader, perspective, if one has to really look at,
Sir, 100 rupees is our total premium.
Correct.
You would see around 18, on an average, 18 rupees. It could be plus or minus 1 rupee this way or that way. 18 rupees is reinsured. Remaining 82 rupees is retained by us.
These 9 months, it's around 80%. So it will be a one-off, or something?
Exactly, because that's why I said that based on, because we had a higher crop insurance in the 9 months, it may not be the case in the next 3 months. So when crop insurance, the element of reinsurance is relatively higher. So you will see this coming back to close to 82 by end of the year.
Sir, our claim ratio, incurred ratio has declined to 85.9%.
Yes.
Because of two things. One is a regulatory, we increase the premium, and third, the initiative we taken. So how do we see, going ahead, where do we, next 2-3 years, your, vision is to bring down this ratio?
Sir, our intention, as I said, is to bring down the loss ratios, incurred claims ratio. We also expect our expense ratio to come down. In case of incurred claims ratio, our focus has been on 2 lines of business. One is health, another is motor.
Correct.
And we have, in case of health, we have done repricing. We have also taken a lot of corrective steps like recruitment of doctors and then using our own TPA in a larger manner. So this is helping us to bring down the loss ratio, and the fuller benefits of these steps will be seen in the next future quarters as well. We have not got the full benefits of the steps we have taken.
Fair, sir. But over next 2-3 years, where do we see this claim incurred ratio of our company?
Sir, actually, the combined ratio, which is now around 110, the projection I had given is it will come down to 105 next year. Maybe in another 2 years, it will come to 100. So the claims ratio, the expense ratio would be around probably around 15. Commission ratio would be about 8. And the loss ratio would be about 77-78% in the next 3 years' time. So you will see the claims ratio moving towards that 77 number in the next 2 to 3 years.
Okay, great, sir. Sir, you said that our AUM is portfolio is 65,000 crore, correct?
Yes, sir.
That is the current market value.
Yes.
35.
Yes, sir.
That is. And how much is if you divide between the pertain to the policyholder investment?
Sir, actually we keep them together.
Okay.
So we don't really segregate the investments. It's kept in one lot.
Okay. And how is the split between
Sorry to interrupt, Mr.
Sorry, last question, madam.
Sir, may you request that you return to the question queue? Thank you. The next question is on the line of Hitesh Gulati from Haitong Securities. Please go ahead.
Sir, my question is on the health insurance segment. So what proportion of our total health would be retail, what would be group, and what would be government schemes?
Sir, about 35% is retail, 55% is group, and 10% is government.
Okay. And so what is the fair value change account as of December 2017?
It's about, 1 second, it's about 25,755 crores.
Okay. And so just one last question is on commission. So the commission ratio has actually increased for this 9-month FY18 compared to 9-month FY17. Is that to do with the MISP guidelines where the additional payments to dealers are also being booked in commission?
Two reasons. One is as you know, from 1st April, the regulator changed the commission and brokerage structure and also brought in a concept of rewards. So that has actually resulted in an increase in the commission ratio for the whole industry. And also this MASP is also yet another reason, but that's only for the last 2 months.
Okay. So thank you, sir. That's it from my side.
Thank you.
Thank you. The next question is on the line of Nischint Chawathe from Kotak Securities. Please go ahead.
Hi. Just two questions. One was, how should one think about
Sorry to interrupt, Mr. Chawathe. Sir, your voice is breaking up. Can you speak a little far away from the speakerphone?
Sure. Just two questions from my side. One was, how should we think about higher claims ratio in motor TP?
Sir, motor TP, as you know, is a portfolio which is improving phenomenally in the last 5 years. The loss ratios used to be about 160, 170% 5 years back. But with a consistent increase in prices by the regulator every year, loss ratios have come down. That is one thing. The second major change is going to happen. In fact, I understand this Motor Vehicles Amendment Bill is listed today in the Rajya Sabha. So this bill has great potential for bringing down the TP loss ratio for the industry because the penalties for traffic violations are going to be increased. Licensing is going to be made stricter, and also a 6 months time limit for filing compensation cases is also being brought about, and also quicker settlement of claims for a lower amount is also being envisaged. So I personally feel this bill will have a great impact in reducing the number of accidents, reducing the number of deaths and disablements, which will help in bringing down the loss ratio.
So for this one as well as for MISP, how should we think about the benefits getting passed on to the customer?
Sir, what will happen is, the industry will have at least a 10% saving in the payouts to the dealers, and also improvements in the claims ratio. At least 5 to 7% on a very conservative basis. So there is a possibility that some would like to pass on a part of it to the consumers. A couple of companies have already announced their intention to do that. We are closely watching the market, and we will take a call appropriately as and when it is required. But you will see some part of the benefits would certainly be passed on to the consumers.
On the MISP side, have you started seeing or have you already passed on anything?
Not yet, sir. No.
Sure. Okay. Thank you very much.
Thank you.
Thank you. The next question is on the line of Atul Mehra for Motilal Oswal Securities. Please go ahead.
Yeah. Good morning and thanks for the opportunity.
Good morning.
So just on the health insurance scheme they announced in the budget. So firstly, just wanted to get your thought process on the commercial viability of the scheme, because what we understand is they've budgeted for a very small amount, about 4,000 crores in the budget, even though the scheme seems very grand with 50 crore plus lives covered. So what is your interpretation of the scheme as announced in the budget?
So what the government has said repeatedly, this is a question which is being asked to the ministers and bureaucrats. See, the government has said that whatever they have allotted is only an initial outlay. The total premium will be borne 60-40 between center and state, so there is also a state's contribution. And they are also saying this year they have allotted something lower because they expect this to be rolled out by middle of the current financial year. And they have repeatedly said that whatever be the money required, they will certainly put in. So here the premium would depend on the kind of packages we all tie up with various hospitals across the country, and also the contours of the product, which have still not been finalized. So the insurance industry will certainly get premiums which are viable, and we will ensure that this scheme is something which makes sense for the commercial sense for the insurers.
And is there also a copay for the final customer, end customer, or it'll only be 60-40?
Things are not yet worked out. In fact, the government is forming some committees to work out the product features. Whether there will be a copay or not will be decided by that committee. So those are all things which will have a bearing on the ultimate premium, sir.
Right. And while the scheme is, say, we look forward to implementation, Do we see this in a similar form as the way crop insurance business is sourced through tenders and through bidding by all the players? Is the
It will follow the same patterns because government generally follows the tender process for price discovery. So there will be tenders, and it will be run by the state governments. The government has already announced that. That will be the process that will be followed, and so this will be on a similar basis scale like crop insurance.
Similar as crop insurance?
Yes. Yes.
Right. And secondly, sir, in case of if we look at the motor business at this point in time, so how do we look at the market settling down? Maybe not now, maybe 6 months down the line or 1 year down the line, where all the benefits that the industry is now getting. Do you think the industry will be in a position to retain it, or would it be passed on to the customer in a bigger way? Because now, at this point in time, it's still early days. But eventually, how do you see it settling down?
Sir, as I said, the industry is benefited to a significant extent because of this MASP. I expect part of these benefits will be passed on to the consumers, and part of it will be retained by the industry. Because with a lot of difficulties, the industry has moved with the regulator to get this achieved, to bring the dealers under the regulatory control. So that's how I expect things would settle down. Part of the benefit will stay with the industry, part of it will be passed on to the consumers.
Right. And so just one final question on health insurance for us. On the retail business for us, post we have taken the price increase and price rationalization, what would have been the inflows, new policy inflows for the first 9 months versus the first 9 months the previous year?
Sir, I won't be able to give you the exact numbers, but certainly, we have become very attractive at the younger age group. So we are getting newer customers for people who are up to the age of 50. So earlier we had a situation wherein our premium rates were not very competitive in that age group. Here we not only increased the price, we also made ourselves corrected the price across the age groups. So we are getting more and more youngsters into our scheme, but I am not able to give you an exact number on that, sir.
Sure. I'll maybe take that offline
Absolutely.
in case we get the numbers offline.
Right, sir.
Thank you, and wish you all the best.
Thank you.
Thank you. The next question is from the line of Vinod Rajamani from HSBC. Please go ahead.
Good morning, sir. Congrats on a good set of results.
Thank you.
I just had most of my questions are answered by previous questioners, but I had just one question. How much of your motor insurance segment is this long-term two-wheeler policies?
Sir, at this point of time, in terms of premium, it's not a major portion because the long-term people are still. They would like to pay annual premiums, so we still see that tendency among customers. So it's not a significant proportion, sir.
Okay. Yeah. Thanks.
Thank you. The next question is from the line of Neeraj Toshniwal from Emkay Global. Please go ahead.
Hello, sir. Congrats on good set of numbers.
Thank you, sir.
So just wanted to understand the tax benefit which have been given to the retail in terms of senior citizen and how much that is going to impact, overall for the industry.
Sir, can you repeat, sir?
The tax benefit which has been passed in terms of senior citizen and very senior citizen retail health segment.
The advantage of that is, today senior citizens' premiums are going up because their loss ratios are higher.
Right.
So earlier, they were getting only up to 30,000, and so many of them were taking limited policies and also with lower sum insureds. Today, this gives them the ability to pay the higher premiums as well as take bigger policies so that, they are able to get adequate cover. This will also mean more business for the insurance sector.
Okay, so how much, anything we have estimated that this much amount the industry will benefit from this proposal?
Sir, it's very difficult to actually, estimate. Any number I give will be totally, off the mark.
Okay.
So it's very difficult to give an estimate on.
Right. And on the other, the healthcare cover, for 10 crore families, I just want to understand, if the premium amount is just too low, what we are hearing in the media, would companies will still be interested, or government how we are planning to do that? Because
So the
probably.
government actually has clearly said that this is just an initial number they have put in,
Okay.
and they also said whatever is the premium required for running the scheme successfully, they will put in. They are charging the health cess, so they have sources of money to fund this scheme. So we insurers will certainly, once the product is finalized, once the hospital packages are finalized, would certainly work out reasonable premium, which makes economic sense to us, which will also help us to run the scheme successfully. So I don't really have any doubts on this, because this is just a number, because they had very little time and they had just given a number, and they have clarified again and again that whatever is the amount required, they will definitely put it. They have sources available.
Okay. Okay. And sir, particularly from MISP, how much improvement we have seen in motor OD, if we can quantify?
Sir, my expectation is, it's actually early days, because just 2 months, and my expectation is a drop in the incurred loss ratio of 5 to 7% is possible, and also a drop of 10% in the payouts which we have been making to the dealers to procure the premium. So about 15 to 17% is possible, sir.
Okay. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Avinash Singh from SBI Cap Securities. Please go ahead.
Yeah. Hello, sir.
Hello.
Yeah. One question on the capital solvency capital regime. So the regulator has sort of invited some consultant to guide the regulator to sort of implement some risk-based capital regime. If that were to happen, how is going to change that? The capital adequacy for you or the sector. If we were to move from the current simple solvency regime to a risk-based capital regime, how it will change the game?
Sir, my expectation is it would certainly lead to increased capital requirements for the whole industry. But as far as New India is concerned, we are adequately capitalized. We are now at 2.39. So even if a new risk-based solvency regime is to be put in place, we'll be very, very comfortable, sir. We have no concerns on that. Hello?
Yeah, that answers my question. Thank you.
Thank you. The next question is from the line of Abhijit Sakhare from Kotak Securities. Please go ahead.
Thank you. Two questions. One was, could you give us the incurred claims ratio for retail, group and government businesses within health, please?
So the retail loss ratios come to around 78%, and the government is about 90%. These are the two areas you want, sir?
And the group business?
Group business is about 105%, sir.
And majority of the benefit has come on the group and the government businesses, right?
Actually, the full benefits are still coming, sir. I wouldn't say that full benefits have come, but certainly the group health loss ratios have come down significantly. The government also, we have taken calls to do away with some of the government schemes. Also repriced one major scheme which we were writing, so that is also contributing to better experience. But we are still, the benefits of it will still happen in the future quarters as well.
Okay. Second question was on your retail businesses. Do you internally track what's the retention ratio across categories of businesses, and what would be that number across health, motor OD, motor TP?
Sir, as you would know, New Day is one of the highest retention ratios in the whole industry because of our brand and also the legacy. In retail health, it's little more than 90% is the retention, whereas in motor it's around 80%, whereas in other lines it's about 82-83%. So we track the renewal ratios, and we have good renewal ratios.
Okay, thank you so much.
Thank you. The next question is from the line of Nishant Shah from Macquarie Group. Please go ahead.
Hi, sir. You mentioned that you're expecting some dealer commissions to drop down by about 10% and the incurred claims also to come down by about 6% after this MISP. So, and you also mentioned that some part of it you expect to retain some of the benefits. So, like, I'm just referring to a newspaper article today. Like, it seems that one of your private sector peers has aggressively cut its motor insurance premiums by about 15%. So, do you think that you will still, the industry as a whole will still be able to retain something as of the benefit from the MISP, or do you think it will be just competed away for market share, like, by one player or maybe a couple of players going a little bit aggressive? Any comments there?
Sir, my comment is, I know I saw the newspaper report about the announcement of a company. So the similar announcement was made by another company about a month back. So that hasn't really put any pressure on the market to give away everything to the consumers. So my sense is, there are many players, there are many bigger players in the market, and they haven't really done that way. So what will happen is, part of the benefit rightfully will go to the consumers, part of the benefit will remain with the industry.
So the regulator would have also allowed this to happen, expecting a substantial chunk of it to be passed on to the end consumer, right? So do you foresee any regulatory issues also coming through if this is not being passed on?
I do not expect the regulator to intervene in this, sir. Because the regulator basically wanted to create a good framework, because there was the way the business was dealt was not to the comfort of the regulator, not to the comfort of the industry also. So that is how this change came. I do not expect the regulator to intervene in this.
Okay. Thank you so much, sir. That's it from me.
Thank you. The next question is on the line of Pinkesh Jain from V2 Wealth Securities. Please go ahead.
Yeah, good morning, sir. Congratulations on very good results.
Thank you, sir.
Sir, to gain more perspective about this National Health Protection Scheme, so the bureaucrats have said that they have studied this Rajasthan scheme wherein 3 lakh cover is being given at a premium of rupees 1260 per family. So at those rates, how viable is the scheme?
Sir, what the government is saying is, the numbers which they have put in as a budget outlay is just an initial outlay. And they have said that whatever is the right premium which is required, they will certainly be able to fund it, because they have now health cess imposed, and also they have other sources to fund it. And also 40% of the premium is going to be borne by the state governments. So what I expect is, once the product and hospital packages are finalized, the insurance industry will certainly look at a proper price, and the government will certainly give it, because they know that the insurance industry also needs to make some margin to run the scheme successfully.
Okay, and per se this Rajasthan scheme, so sir, what are your views on this?
No, you said the numbers of the Rajasthan scheme, so that is it. That is based on the experience the industry, the insurance company had in Rajasthan.
Okay. Yeah, thank you.
Thank you. The next question is on the line of Bharat Seth from Quest Investments. Please go ahead. Mr. Seth, your line is unmuted. Please go ahead. Hello. As there's no response from the current participant, we'll move on to the next. That is on the line of Charulata Gedani from Dalal & Broacha. Please go ahead.
Yeah. So you mentioned the breakup of retail, group and government. That is for the entire business, or it is only for health?
This is only for health, ma'am.
Okay. And on an overall basis, can you give the breakup?
On an overall basis, I can break the 100% into 65% as retail, 35% as corporate or commercial. And in terms of the government, really, what you really call as government is a question, because there are public sector undertakings giving business. So I won't be able to give you a number on the government, but 65-35 is retail, corporate, commercial.
Okay. And how much would be the tax rate going forward?
There is, as far as we are concerned, we are still in the MAT because we still have some carry forward underwriting losses which may come to us for the next 4 to 5 years. So we'll be in MAT, and even in MAT we get some exemptions for the part of the like dividends and all. So generally we expect our taxation rate to be around, I would say around 16%. I mean, it could vary marginally from quarter to quarter, but on an average around 16%.
Okay, right. And the last question, in terms of revenue growth, you said 20% growth is sustainable for a real long term. What type is, I mean, how much of this would be volume driven and how much of this would be price driven?
Ma'am, actually both will happen, because in terms of volume driven, what is happening is, there is a better understanding of insurance, and as the standard of living of the people increases, they have more disposable incomes, and they think of insurance. There are certain insurances like health insurance, householders insurance. These are all becoming almost necessary for every individual and every family. So that will be one one reason why how growth would happen. There is also a rate correction happening, especially in certain lines like health insurance, fire insurance. So that will also contribute to increase. I mean, if you really ask me how much of 20% is due to this, I won't be able to give you a breakup, ma'am.
Okay, fine. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. We'll take the next question from the line of Bharat Seth from Quest Investments. Please go ahead.
Yes, sir. Thanks for again opportunity. So the employee cost, remuneration has come down in absolute term from 1,700 crore to 1,580. So any specific reason?
Sir, actually, if you look at our company, there are a lot of retirements of senior people happening. So even though, we recruit youngsters in lesser number, actually our number of employees are coming down. It was about 20,000 3 years back. Today we are only about 18,000. So what we are seeing is the high cost senior employees are superannuating. So that's the reason why we are seeing the employee remuneration coming down. But we are able to increase our business because the technology is helping us to scale up without having to add to human resource.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments.
We're extremely thankful to all the investors and analysts who came for this call, and we can assure you that New India will do its best to improve its performance in the coming quarters as well. Thank you very much.
Thank you. Thank you, ladies and gentlemen, for being a part of this conference call. If you need any further information or clarification, please email at snyder@conceptir.com. Ladies and gentlemen, this concludes your conference call for today. Thank you for using Chorus Call conferencing services. You may now disconnect your lines. Thank you and have a pleasant day.